Are prediction markets like Polymarket and Kalshi rigged? Do you actually have a chance of winning? For prediction markets, today I'm going to be breaking down its real world value, while most investors lose who actually participate, and some simple, disciplined investment strategies you can take to increase your chance of winning in prediction markets. Prediction markets by far represents one of the most valuable real world use cases of crypto and blockchain technology. While some call it another form of gambling, nonetheless, it does provide values and insight on events and things around the world that we didn't have before. During the 2024 US elections, I remember checking Polymarket and comparing the speed of predicted outcomes to news organizations like NBC, CNN, or Fox News. What I noticed is that Polymarket predicted the outcomes of state elections and the presidential election much faster and much more accurate than mainstream news media. By the end of the election, Polymarket was my main source for outcomes for each state and the presidential election, with my secondary source just being news media. The fact that all of the transactions were posted publicly on a blockchain called Polygon, which is an L2 that's available for everybody to see, everyone around the world was able to get instantaneous feedback and insight from the elections. The speed of these results was new to the world, coming in much more faster than what centralized entities like news organizations could provide. Since then, the prediction markets have become a staple of the financial markets. Whether you're looking at future oil prices, elections all around the world, Fed rate cut decisions, or even the weather, it now gives us insights into new topics and events we didn't previously have before. But the key question, now with millions of people participating, do you as an investor actually have a chance of winning if you do participate? Well, not so fast. An analysis done of Polymarket of 1.6 million accounts since 2022 showed that 67% of the profits have gone to just 0.1% of the accounts. I repeat, 2/3 of the total profit went to less than 2,000 accounts out of the nearly 1.6 million. With that 0.1% netting profit of around $500 million. For Kalshi, the other prediction market giant, it wasn't that different. The company said that for every one person who made a profitable outcome on the site, there were 2.9 unprofitable users. But why are so many people losing? Well, to understand that, you need to understand that prediction markets are based on probabilities. This is a good example about Fed rate cuts. As you can see, it gives you a chance to place your pick on whether you believe there will be zero rate cuts in 2026 or more. Looking at the option for zero rate cuts and 0 basis points, you can see that you can vote no at 41.6 cents. What does this mean? It means, for example, if you bought one share, it would cost you 41.6 cents. If you're correct with your results of December 31st, you will receive a payout of $1, meaning that you make a profit of 58.4 cents because you put in 41.6 cents and you will receive $1. If you're wrong, you receive a payout of $0, meaning you lost your full 41.6 cents. Now, obviously, you can see that it's 59% for yes and 41% for no. So this breaks down into probabilities of how many people expect yes or no. If this sounds familiar, that's because it is. Polymarket resembles a stock market limit order book. The buys and yeses that you see are simply buy or sell limit orders. But also it is very different from the stock market. In the stock market, someone can make a gain on the stock, sell it to you, and you can hold it for another year or more and make another gain. Both parties walk away happy. But prediction markets is different. It's a zero-sum game, meaning that there is a loser. If you had put in 41.6 cents and your decision was wrong, you walk away with nothing. That's why the stakes are much, much higher. But why do you lose? Well, there's multiple reasons, but a big part is that you are likely going up against sophisticated investors who make up the majority of that 0.1% who win. The sophisticated investors understand how the markets work. They understand that most retail investors are making emotional decisions. When they are betting on their favorite sports team or they are betting on their favorite election candidate, they are actually betting on who they hope will win, not who actually has the chance of winning. The sophisticated investors use this against you because for every buyer, there has to be a seller. And this is well known. You can see that a former professional poker player talked about how sports betting was the easiest market. Why? Because you had a lot of young men who were basically addicted to gambling. And most of these people were just casual traders who just betted yes on what they hope will happen. Key lesson: make sure you're not making decisions in the prediction markets solely based on your like, your interests, or emotions. Your decisions should instead be based on analytics and unbiased research. Remember, focus on the fundamentals. Next, the other reason you lose, and many people just don't want to admit, is that people have information that you don't have. And that's called material non-public information, which is any information that can change the value of an asset. For example, if you know a company is about to report earnings and revenue is going to be 20% above analyst expectations, well, that is likely going to result in the stock price increasing. If someone knows the information beforehand, they can do things such as buying the stock or buying call options to profit when that news actually comes out. You can see an example of Netflix. When they outperform analyst expectations, their stock price increase. This also applies to negative news. If someone knew that Rite Aid was about to file Chapter 11 bankruptcy beforehand, they could literally buy put options or short the stock and profit once that news came out and the stock price went down. While this is illegal and is called insider trading, unfortunately, it still does happen in the stock market. And the prediction markets are definitely not immune. Recently, a special forces soldier who was directly involved in the U.S. operations in Venezuela back in January made a $400,000 profit by trading on Polymarket a few days before the actual operation. We also recently had 3 congressional candidates get banned and suspended on Kalshi for betting on their own elections. I mean, imagine the conflicts of interest if you have candidates participating in a race and have direct influence over the outcome, actually placing financial bets on their own election. And I can go on and on about other examples as well. But one thing is clear. Crypto still remains a gray area, and there are definitely a lot of people who have more information to things than you. And this also applies to policy as well. One big thing happening in the crypto area is the Clarity Act now. There are definitely a lot of asset managers and big investors who have access to certain congresspeople and can call them and get insight to the process in a way that could potentially give them an edge in the investment markets. Well, with all of this, how do you actually have a chance of winning in prediction markets? Well, let me give you a simple, disciplined investment strategy that you can research to start today. This strategy is called near resolution yield harvesting. And basically it involves finding high probability returns and really just looking at things on an annualized basis. And what I mean by annualized is something that we see every day. So for example, when you see DeFi yields, they may say a 9 or 10% number. That's the annual yield. Or you see a savings account rate and it's 3 or 4%. That's the annual yield. Let's say someone puts $100 into a savings account on January 1st. Then at the end of the year, they have a balance of $110. So $10 in yield. 10 divided by 100 is 10%. So that's a 10% annual yield over 365 days. Now I'm going to explain how this works with Polymarket. Looking at the example I'm showing you on the screen about oil prices, obviously you're predicting that no, oil prices won't hit $150 by May 31st. And you can see June 1st, 2026 is when this contract resolves or settles. So this means if you put in 94 cents, you would get back $1 if you're correct. So let's say that you made this pick and there was only around 30 days left until the contract settles. A 6% return in 30 days equals 106% annualized, and a 5% return in 30 days equals 74% annualized. Now compare that to what you normally see even for DeFi yields, whether it's 9 or 10% or high yield savings account at 3 to 4%. This return is much, much higher. To do this, just go on Polymarket, look for events who have a high probability of success, such as 95 or 96%, and look at the date that actually resolves, whether it's 30 days or 60 days from now. If the prediction is something that pays out 5 or 6% in 30 or 60 days, then that's going to be a very high annualized return. Obviously, you have to adjust the risk of that, but it's something you can look at. Be careful about when doing this strategy is looking at the date that each contract resolves. So looking at this example of the Democratic presidential nominee for 2028, you can see that it resolves November 7, 2028. Two candidates that people are saying no at a 90% plus probability. Now, if that's true and you believe that, this is not necessarily a good option to pick. Why? Because there's about 2.5 years before this actually resolves. So you take that 8 or 9% return and you annualize that over 2.5 years, the return is actually pretty low and you could have a better investment opportunity elsewhere. Now, with the involvement of AI, there are more ways that you can get into prediction markets in a more sophisticated way. You technically can create your own algo bot, and you can easily do this even if you're a non-developer using tools such as OpenClaw or Claude. Now, if you choose to go this route, it is going to require a lot more research, and you do have to understand that if you're pulling from any public strategy, well, then everybody already knows. So the returns are likely minimal. To be successful, you may have to get a strategy and then adjust that template. That's more research and that's more risk. Secondly, don't forget, as I stated in the last video, there definitely are other ways to win in crypto. And that's by going for the infrastructure, the backbone and the flooring which all projects are made. For crypto, that's obviously something like Ethereum or even Solana. For AI, you have NVIDIA, the Taiwan Semiconductor Company, and also ASML. These are the infrastructures, the backbone on which the whole industries are built on top of. With these, you are not worried whether Polymarket succeeds or another crypto prediction markets comes out in the lead. You're not worried whether Claude becomes number one or whether ChatGPT or the others come out in front later on. You own the infrastructure under both of these, so you win regardless. And that's what's the angle on why most investors don't win in the prediction markets, and some disciplined investment strategies you can look at that could potentially make you come out on top. But those are my thoughts. How are you playing the prediction markets? If you enjoyed this video, believe it has some valuable insights, hit the subscribe button, turn on those notifications, and I'll see you next time.